I won't bother doing the introductions. Alex, I'm just going to turn it right over to you and take it away.
Fantastic. Thanks so much, Nick and Howard, for hosting the event today. Been a great day so far, and really excited for this panel here to be joined by this wonderful group to discuss the important new developments taking place in the central bank digital currency, CBDC space, as well as with stablecoins. I'm going to do quick intros just to keep the panel moving here, and then we will jump right in. So I'm starting here with Daniel Gorfine, founder and CEO of Gattaca Horizons, co-director of the Digital Dollar Foundation, and former Chief Innovation Officer at the CFTC and Director of Lab CFTC. Next up, I'm joined here by Kiran Raj, Executive Vice President at the DM Association, where he leads overall ecosystem development, growth strategy, business design, and execution for the project, former O'Melveny and Myers partner, and Deputy General Counsel at the Department of Homeland Security. We also hear David Zhao here, Chief Economist at Wangxiang Blockchain, former economist at the China Investment Corporation and Nanhu Finance Corporation, and Ashley Lanniquist, project lead for blockchain and digital currency at the World Economic Forum, where she leads their work on CBDCs, stablecoins, and blockchain for government transparency and anti-corruption. So once again, really delighted to have you all joining me here today, joining all of us. Thanks. I mean, I think just in terms of a quick introduction of the topic, this is a panel, honestly, like many of these, a topic that could be the subject of its own full day conference, frankly. But we'll try to do the best to get through as much as we can. It's fair to say, I think that we're living through right now one of the most exciting kind of moments of reinvention and reimagining of the global payment system. And with tremendous growth over the last couple of years, and especially in the last 6 to 12 months, stable coins, including and CBDCs as a broad category, have achieved a market capitalization of nearly $50 billion. Simultaneously, central banks and governments are not staying on the sidelines here. It seems like almost every day we're hearing exciting new developments that are taking place with respect to stable coins and CBDCs. This is obvious in the most recent BIS survey that came out recently that revealed that 86% of central banks are actively engaged in some kind of CBDC work. And of those, about 60%, up from 42% in 2019, have moved to conducting experiments or proofs of concept. And 14% are moving toward development and pilot arrangements. So there's a ton of activity in the space broadly. And even today, for those of you who have had a chance to see the news, even Chairman Powell of the Fed said that a digital dollar is a high priority project for them, echoing similar comments from Treasury Secretary Yellen as recently as yesterday. So it's great to have you guys all here. So I'm just going to go ahead and jump right in, and I'm hoping, Daniel, that you can lead us off here with, just kind of helping to calibrate. We've heard a lot from other speakers about how cryptocurrencies and decentralization are changing finance. But can you help set the stage for us a little bit about why this discussion of CBDCs and stablecoins matters, and what are the key concepts that we can use to help ground this discussion today?
Yeah, thanks so much, Alex, and great to join all of you this evening or morning. I guess it depends where you are in the world. I'm glad you noted Chairman Powell's comments today. The fact that he referred to CBDC as a potential high priority project, I think, says a lot about where this conversation has gone, at least in the US, over the last even 18 months. But yeah, I mean, look, to help set the stage or context here, and I'm probably going to be sharing stuff that people have thought about before, but I think it always helps to contextualize, why we're talking about things like CBDC today. And so I like history, so I'm going to give a bit of an historical perspective on this. It's fair to say about 3,000 years ago, human beings invented coins. And if you think about what a coin is, it's a physical token that people could exchange for current goods and services. And these coins or these tokens also served as a store of value and allowed for future consumption. Now, the peer-to-peer exchange of a physical token is incredibly efficient, it's fast, and it's very low cost. Alex, I could give you a primitive coin and you could give me back a primitive bottle of beer, and the transaction would settle instantaneously, and it would cost us next to nothing in terms of consummating the transaction. But if you think about how the world evolved, I mean, we ended up with new modes of communication, whether it was like horse and carriage or telegraphs, telephones, fax machines, and eventually computers. We also started, with global travel and the ability to move over great distances. It would become really difficult to use those physical tokens and try either lugging heavy quantities of those around or having others do that on our behalf. So we couldn't do those types of face-to-face transactions. And again, taking some liberties here, that's effectively how the accounts-based systems of payments developed. In order to accommodate a modernizing economy, we needed to have some type of a trusted central party who could maintain a ledger and track transactions for us. And, quite honestly, that system works really well, and I think it'll continue to work well. I mean, we build bank accounts, credit cards, debit cards, like e-money systems all rely on accounts-based payment infrastructure. Of course, there may be some inefficiencies, right? Given the role of intermediaries, including potentially higher costs and slower speeds that are associated with those systems. So it's kind of with that context that when we start talking about CBDC or stablecoins, the question becomes like, what if there were a way in our modern digital world to transact in a way at least comparable to the peer-to-peer way with a token, almost as if you were exchanging something physical? And I'll stop my opening comment here in a moment, but effectively, that's what I think this entire era of tokenization, crypto, blockchain, what does it stand for? It stands for that proposition that you can send information about value and information about unique ownership of value, halfway around the world to another individual, and effectively replicate a lot of those things that we were able to do in a peer-to-peer way with a physical token. So that's something that can drive down costs, provide great efficiencies, increase access, and you can also build a lot of innovative models on top of that core infrastructure. So that's at least how I've been actively thinking about why this is also important. I don't think that this is antithetical to existing payment systems and infrastructures. I think it'll operate alongside those existing systems and may have certain use cases and applications where it's most effective. But at least that's the historical context I like to think through.
Fantastic. No, thank you, Daniel. That's really helpful in terms of grounding us and providing some concepts that we can kind of weave hopefully into the rest of the discussion today. Shifting over from sort of the conceptual underpinnings of CBDCs and stablecoins to kind of like understanding where are we in both in analyzing the this concept and bringing it to life. Ashley, I was hoping I could turn to you next to kind of give us a sense for where we are in terms of adoption of these new forms of money from a stablecoin and CBDC perspective. And I know it's a broad question, but what kind of trends should we be paying attention to here?
Thanks, Alex, and thank you to the conference for having me. So from a high level perspective for CBDC, which Daniel well introduced, so there's a lot of activity and research underway. That's clear. Alex was naming some statistics, some more statistics from the same survey in terms of retail CBDC, which is where you and I and regular households and businesses would have accounts with the central bank or be able to engage with this digital currency. About 10% of the central banks surveyed in that survey, which there were 65 reporting, feel that it's likely they'll issue a retail CBDC in the next 1 to 3 years, which I think is a little bit high, but that's what they reported. And 20%,
optimistic.
yeah, it's them reporting they feel that it's likely. 20% in the next 1 to 6 years, with the remainder saying it's possible or unlikely. And then for wholesale CBDC, which is pretty similar to current status quo systems, but envisioned to be having a little bit more expanded functionalities, where the financial organizations who have reserve accounts with the central banks can engage maybe in more elevated manner with the central bank money. Central banks, 7% report feeling they'll issue this wholesale CBDC in the next 1 to 3 years, and 17% in the next 1 to 6 years. And as Alex was saying, these numbers have all increased in recent years, and the BIS says, which I think makes sense, that the reasons are number one, having had conducted more research for longer time by the central banks. Number two, the acceleration of digital payments from COVID-19. And number 3, in their words, the specter of global stablecoins. So all of those reasons are driving a lot of interest in CBDC, but it should be emphasized that no developed economies have decided to issue one. They don't even have clear timelines related to issuing. The ECB says that this summer they'll decide whether to start experimentation, which will better inform their decision of whether to issue. And so the Fed and all these central banks are looking at it closely, but they haven't determined whether to issue definitively. But emerging economies are a bit more probably aggressive or forward-thinking in some of these aspects, and you know, we have some early cases in the Bahamas and who have started to issue. And China is in a pilot, so it's not official that they're going to issue one, but could be likely. So that's a take on CBDC and stablecoins. I think a lot of people in this conference have probably more expertise than me on the subject, but my observation is that, you know, there's very high adoption from stablecoins from those who are already in the blockchain and cryptocurrency ecosystem, or those who are newly joining, who are using it for trading or DeFi applications. But usage beyond this ecosystem is quite limited still. So there's not a lot of people around the world using it for everyday use. We could talk about some of the reasons why during this panel. Of course, there are some cases, but it's not extensively used. And I don't know if it will become very widely used, but certainly it could be, and that's why a lot of policymakers are thinking about risks of global stablecoins.
That's terrific. Thank you, Ashley. That's really helpful, and I think we'll come back hopefully to some of these questions about use cases on the stablecoin side, as well as, you know, I'm gonna, you know, prepare your answers on the timeline piece, because I want to, you know, we're gonna take a little game here at the end and, you know, see who ends up being closest to when the CBDCs really formally launch. But, you know, that was a great kind of lead up, I think, to the next question here for you, David. You know, we're so lucky to have you here with all of your expertise on, you know, in terms of what China has been doing. And I think it's fair to say that, you know, China has been taking a leading role in thinking about and testing and evaluating, you know, what you know, various you know, kinds of you know, digital currencies, state-sponsored or otherwise, could look like. And so, you know, given your expertise there, and also I want to come back to this too, if you could address this in your remarks, you know, as a user of the DCEP system in China, like, what can you help ground us in what is China, you know, China's efforts in this space looking like right now, and how has your experience been thus far using the DCEP in the pilot?
Okay, thanks, Alex. So so as Ashley just mentioned, so China is pilot testing the retail CBDC. Its name is ECNY, just stand for Electronic Chinese Yuan. And even though it's still in the pilot testing, but actually I think I'm not a very active user of this and ECNY wallet. Oh, can you see this one? Oh no.
A little bit.
A little bit, yeah. So it's a wallet and installed on my mobile phone, and so I use it to buy books, so buy other stuff from e-commerce and platforms. But it's a very interesting design. So as many of the audience and maybe aware of, I think China has the most advanced and mobile payment system in the world. And for example, the two leading companies, Alipay and WeChat Pay, and very powerful, and they have very high penetration and acceptable, and in many use cases. So China wants to introduce the ECNY just to further modernize the retail payment systems. Actually, and from the standpoint of the Chinese central bank, and it doesn't consider ECNY as a kind of typical CBDC, because usually if you look at the design of CBDC, no matter it is wholesale or retails, CBDC is claims on the central bank and is issued by the central bank. But however, if you look at the case of ECNY, so it is not a claim on the central bank. It is not issued by the central bank. Rather, it's issued by several commercial banks. So these commercial banks are called designated operators, or you can call them as ECNY issuing banks. So most of all, you can consider the ECNY as a claim on the commercial on those banks, but the banks and issued and ECNY based on their deposit reserve kept with the central bank. So, and the central bank also introduced very strict regulations on those banks, just to make sure even they issue their own ECNYs, but they are be exchangeable or fungible with each others. So that's not a typical ECNY, not typical CBDC. So if you look at the literature of the Bank of International Settlement, so the Chinese ECNY maybe belongs to indirect CBDC or hybrid CBDC. So as from experience as ECNY users, I think they're very convenient and is the most convenient as Alipay and WeChat Pay. But still, the central bank work very hard with the commercial banks and with several local governments to promote the use of ECNY, just to make sure that more and more merchants or companies can accept ECNY. And so just I want to share this moment. Yeah.
Fantastic. One quick follow-up on that, David, which is just to say, like, what is the adoption rate among merchants currently for the ECNY? Like, can you use it in a lot of places right now, or is it fairly limited in acceptance?
So online, because I get my ECNY wallet from Shanghai, and so different pilot cities have different programs. So in Shanghai, I can use the ECNY to on e-commerce platforms. And there are also maybe some hotel and restaurants can accept ECNY, but I haven't been there. Yeah.
Got it. Yeah, it's hard to right now. That's
yeah.
Thank you. That's terrific. Thanks so much for providing us with that background on what's happening in China. Kiran, shifting over to you, given your role as the executive vice president at DM, I mean, wow, you have a front row seat to what's happening in so many aspects of this space. And I was wondering, like, if you could, we've had a lot of discussion around CBDCs so far, and I was just wondering, like, if you could kind of just kind of ground us in kind of the state, the rationale behind the use of stable coins. What are the use cases that you see? I know that Ashley mentioned, that obviously usage has grown dramatically, probably maybe faster than anyone expected. But if you could help ground us on use cases and how you see this kind of growing from here, that would be great.
Yeah, sure. Happy to do it. I mean, I think one of the things that you're seeing for many of the use cases for stablecoins is much like Ashley mentioned, mostly in crypto world, right? So from DeFi to, frankly, moving money between crypto exchanges and other players on the various different blockchains that are out there. That's the primary place that stablecoins are used today. I do think a lot of the big growth, though, and the big potential is in more traditional finance areas. One thing we talk about is ordinary people doing ordinary transactions. And that's really where you need to get for stable coins to grow. And that's where there's a really interesting interplay between where we have the private stable coins today and where the CBDCs might play in the future. Of course, the interplay is really hard to figure out right now because, actually, as Ashley mentioned, nobody really knows where these CBDCs are going to land. You could have wholesale CBDCs, which are just, frankly, for banks and banks sending money around, or in this case, would be CBDCs around. And in that scenario, you'd still have, I think, a pretty big role for private stablecoins who have to hit the last mile down to retail. You could also imagine a world where you have CBDCs at the retail level, but that actually has its own really interesting challenges from an operational perspective. Like, is the Fed, for example, going to be doing KYC on individual users the way it requires banks and others in this space to do today? Probably not. So there's real interesting challenges that have to be worked out from that perspective. And then you have it across all the different countries, right? So where the Fed lands in the United States might be very different from where the European Union lands, which might be different from where Japan lands, and et cetera. And so you can imagine each of those different scenarios having a spot for stablecoins. And in fact, you can imagine a multi-currency stablecoin that takes all the different CBDCs, puts them together in a basket that's fairly unique. So you have that. And the other piece too that I think sometimes gets lost when we talk about stable coins is it's not just the fact that they're, one-to-one pegged to the particular currency, but many of them are built upon networks that have really interesting, or software that has a really interesting value other than just the fact that you can peg a particular asset. So you can add smart contracts and more broadly, software modules on top and provide value-added services and other things that you don't normally get or you don't think about in a CBDC context. So I think regardless of where some of the CBDC pieces land in the future, you're going to see a role for private stablecoins or potentially private issuers. Now, it may be that those private issuers are highly regulated, like banks, trust companies, and the like. It's probably, there seems to be a little bit of a movement away from the money services businesses issuing, at least in some areas. So you can see that trend probably a little bit more in the future. The other piece that I think is pretty interesting is what do you do today? So there are a number of different private stablecoins that are out there, and they are playing in, again, mostly the crypto space, but there is this view of like, how do we move into the merchant space and more traditional finance? And that really goes down to some of the design decisions, compliance, being, regulated really well from the beginning, making sure people are comfortable with reserve designs and things like that. And so you're going to see, I think, a lot of probably competition in that area until we get a CBDC that can come in, frankly, provide a little bit of clarity on some of those issues. I mean, certainly speaking from our project, if the US had a CBDC tomorrow, we'd welcome it. I mean, that'd be actually a great option. But I think as Ashley mentioned, some of the stuff is years down the road.
Fantastic, thank you, Kiran. Just kind of continuing on this discussion about potential use cases, one use case that has piqued my interest and I'm sure others in the group as well, is around how could CBDCs and stablecoins be used for financial inclusion? Like, how do we think about the opportunities there to kind of increase the access to monetary instruments like that? And Ashley, I'm sort of curious, given your research at the World Economic Forum, if this is something you might be able to weigh in on.
Thanks, Alex, and I'm sure many of the panelists would have interesting contributions to this as well. So hoping to hear from you all. Oops. So for financial inclusion and stablecoins and CBDC, I think about this topic a lot, and I'm leading a research team looking at this question of whether and how stablecoins improve financial inclusion on top of pre-existing options. Thus far, there's sort of two evident unique value propositions that we're finding for stablecoins. One being this ability to now have a more open and interoperable ecosystem with blockchain, where there could be more competition, which could drive the prices of some of these financial services that are offered to be lower, as well as maybe create the existence of new valuable services for people. And then another could be this notion that people could have on public view that in their ledger, in the public ledger, their financial histories and some account balances that could maybe be used for credit underwriting, or demonstrate that this person has this amount of collateral here to offset some loans, although that comes certainly with some privacy issues and considerations. So those seem to be the unique value propositions, and thus far I haven't seen others, but we can discuss that. And either way, some significant constraints still exist, and they're the same ones that exist for any digital systems. Things like limited digital and financial literacy and limited numeracy, which is the ability for people to understand working with numbers, depending on the geographies and demographics that you're speaking about, and challenges with last mile digital infrastructure like internet access, whether people have a smart device capable of securely receiving and storing stablecoins, and importantly, acceptance of the stablecoin for everyday purchases. And if you don't have those conditions met, the internet, smartphone access, acceptance, you're going to have intermediaries, and they're going to have to convert to the fiat currency or do other operations along that value chain. And then you're going to have inefficiencies, and you're not going to get rid of those. So anyways, we could go into detail on a lot of those subjects, but for CBDC, I think it's interesting to think about whether it does things better than stablecoins. It's still not a very clear-cut case. It has a lot of the same constraints and issues with the digital ecosystem, but some things that it can do better are, number one, I would imagine merchant acceptance would probably be higher because it's the sovereign currency. Number two, you don't necessarily need a smartphone device with CBDC. Many central banks think about how to design them to be compatible with feature phones or even just physical stored value cards. There's no need for currency conversion, and also the monetary authority. It's a public sector entity. It doesn't need to make any profit, so it's probably more likely to be able to offer this service for the lowest cost and even subsidize it. The public sector could also say to the telecom companies, okay, we want you to make any CBDC transactions free. So there isn't even any data cost associated with them. They could do things like incentivize participation by using fiscal policy and saying, okay, anyone who opens up a CBDC account is going to get $500. And that could be harder for other entities to do in a financially sustainable way. And then the last point I wanted to make is a little bit different from some of the comments I heard this morning, which I was frankly surprised about. But there's a difference between public money, publicly issued money and central bank money, and privately issued money. And there's just a trust and confidence if a central bank is backing a currency and it's a credible central bank, which is the case in most developed economies, that you're going to be able to redeem that currency for the currency that's used in the economy. So yeah, CBDC offers that trust more so than any other forms of digital payment.
Thank you. And Daniel, looked like you were maybe going to buzz in there. I didn't want to cut you off.
Just quickly on access and inclusion. I think Ashley's remarks are spot on, and I would start and kind of echo the importance of just lower cost throughout the system. I mean, that going back to my historical analogy of saying we're doing something that allows for a more direct transmission, which does disintermediate certain actors in the current payments systems, which should drive down costs. But then the second thing I would maybe add to this is I think that digital wallets, the custodians of the digital asset, is a critical feature. So part of the hypothesis that I have around access and inclusion is that the regulatory, the operational, and the technological costs of providing that digital wallet or custodial service may be lower than the cost of offering a traditional bank account. Now, that's an hypothesis that I think needs to be tested out in the real world. But you can think of it as almost like bank light. It's a very narrow, discrete service that you're offering. The technology is pretty light as well to be able to offer the service. And if regulators get it right and don't impose onerous costs on the system, offering that custodial solution, that wallet, may be lower cost than a traditional bank service. And if that's true, and you do combine that with the fact that many of the global and underbanked do have smartphones, and I take Ashley's point, it doesn't even have to be a smartphone, but those who do, you can imagine them coming preloaded with like a wallet service. Now there's a digital ID component to this, so I'm going to put that to the side for a moment, but assuming we crack that nut as well, you can onboard a lot of individuals into a more formal financial system through that type of infrastructure. Now, I say that a lot of this is an hypothesis, and that's why, at least through the Digital Dollar Project, we've been really large proponents of saying we need real world testing to see if that bears out.
That's helpful. Thank you, Daniel. Just keeping moving on, because I just do see time ticking down here. I wanted to cover a couple other just areas real quick. Then I know we're getting a few questions coming in. One question is just around, I think we'd be remiss about talking about all of the opportunities with CBDCs and stablecoins without also talking about potential for risks. And so I don't think we want to belabor this one too much, but I am curious, a lot's been written about the risks associated with this from a research perspective, and we don't need to rehash all of that. But I am interested to hear, whether it's David or Kiran or others, how do you think about the risks here, and and kind of the opportunities in balancing those two against one another? David, do you want to start on that?
Yeah, sure. So for stable coins, and so we have noticed that in the past months, both Europe and America has introduced some guidance on regulations. So Basically, I think that if the stable coin is backed 100% by fiat reserve at some high quality banks, so it will be a payment tool rather than a monetary tool. That means so there will be no monetary money creation, and so no impacts on the monetary sovereignty of the countries. And it's just like Alipay and WeChat Pay in China, and but it's use the token system rather than the account systems. So if you look at the case of Alipay and WeChat Pay in China, so whenever user and refill the Alipay and WeChat Pay account, the money go from the user's commercial banks and directly to the central banks. So the value of the Alipay and WeChat Pay account already be backed by reserve at the central bank. So it's like very similar to and high kind of CBDC backed on and account models. But I think for the stablecoin, it's just move from the account model to the token models. So if it's just 100% backed by fiat reserve and invest in a very and prudent manner, and I think should be fine. I don't think much risk caused by stablecoin. Yeah. But for CBDC, and I think there's one concern, and I think also mentioned by Yellen in her talk at the New York conference. So there's some concern that maybe the retail users can exchange the deposit from commercial banks and to CBDCs, and this will lead to introduce some instability in the funding resource of the commercial banks. Also push the deposit rates a little higher. Yeah. But however, if we look at the case of the design of retail CBDC, so most of them follow the two-tier operating systems, very similar to the Chinese model I just mentioned. Just make sure that the commercial banks face the retail users and face the retail use case and provides the user interface. And in this way, I think a flight from deposit to CBDC will be limited. Yeah.
That's helpful. Thank you, David. Kiran, you were gonna.
Yeah, I think the other way to think about the risk for the private stable coins is really comes down to the trustworthiness of the peg, right? And you can classify the private stable coins in really two big categories. One is those that are unregulated, and those that have a regulator that looks over what the company is doing that's issuing these coins. And so, and even in so I think the unregulated one is pretty sort of speaks for itself in terms of what the inherent risks are there. I think what's really interesting is more on the regulated side. So you can imagine really different ways of coming at the problem. So for example, there are, there's various conventions or, sort of requirements that they're like Basel III, for example, that talks about, how do you build a reserve? How do you make sure it's good against leverage issues, large credit exposure, operational shocks, interest rate shocks, things like that. And you want to build, I think, reserve that can handle all of those things. And you want a regulator behind it that's making sure that the company's doing all the appropriate things and that goes to trust, because in some areas you have different types of regulators who might not go into that type of depth and that type of model, and people who might have lots of cash exposure, and that can cause issues, especially if there's a run on the reserve. But ultimately, when it comes to the private stablecoins, I think that's one of the biggest issues when people think about risks, which just comes to the trustworthiness of the peg, and is the money actually going to be there if it's needed?
Fantastic. I know we're starting to get to the end here. I wanted to kind of just close with a question, the same question to all of you. And I know we don't have a long time, so I'd love to hear these in more depth. But it does feel to me that we're at this time of we're still processing through concepts. Things are starting to come into production in various cases in the stablecoin space through pilots, and it's just such an exciting time here. But if you could have your crystal ball, for all the investors out there, for all the startups, the folks that are working in and around this industry and market, what give us a quick little glimpse of what you see the future looking like. And just quickly on that, and then we have one final question that Howard wants to ask as well.
Okay, Alex, I'll jump in. So for CBDC, I think many developing and developed economies will issue one, but in the long-term horizon, and that we're not quite there yet. For a few reasons, in the developed economy, there isn't that much of a need yet. But if private payment service providers and private currency starts to gain a lot of monopoly power and presence, there will be more of a need, for instance. And then for stable coins, I think it's not going to have extensive mainstream use ever. That's just my view. It's highly debatable, but looking forward to seeing more about it, and certainly very interesting innovation right now.
Fantastic, thank you. Kiran?
So, yeah, I think it's great because I'll take the opposite view of Ashley, just so we're not all agreeing on everything, which is I think that generally you won't see many stable coins that will get wide adoption, but I think there will be a few, and especially those that focus on the types of things in traditional finance, like merchants and others really care about, which is, strong regulatory backing, compliance, good reserve design, things of that nature. So I do think we're going to see private stable coins in that area until CBDCs really get off the ground, especially those from the United States and Europe and some of these larger jurisdictions.
Fantastic, Daniel. And then we're going to close with a question for David.
Sure. I guess I'll just briefly say, again, back to my opening remarks, I think a lot of what we're talking about is basic plumbing and infrastructure for financial services and how we move assets. And that's going to touch the way we transact in all types of assets, including, money itself. And I'll conclude with, the choice, fiat money is a public good and it's public infrastructure. And there are design choices that we make today about how we issue that. And there are design choices we're going to make tomorrow about how we do that. I do believe there's a way for us to modernize that infrastructure so that there can be kind of rampant private sector innovation on top of that, which is what we've seen with the existing choices that have been made. So I think there's a world that we're going to be unlocking in the near term that, and I'll be a little bit more bullish in terms of timeframes. I think like these things go, there's usually this kind of slow momentum, and then all of a sudden a tipping point is hit. Maybe today's comments from Chairman Powell is that moment, but I'll be more optimistic that it's sooner than later.
Fantastic. And then, just to close out, I know Howard and David, I don't want to take away your opportunity to answer this question, but I know Howard, you wanted to kind of ask a question to David, and maybe that could be a good closing question.
Yeah, so let me just summarize a couple questions that came over the transom from the audience for David, and then add something to that. So, as you mentioned, China has moved very quickly ahead on both mobile payments and also now on a pilot CBDC program. And people have speculated on what the government motivation for doing that is. For example, there is speculation that there's a fear that WeChat Pay and Alipay have too much power. And there's a question of how much continuing role, or how important will they be after a Chinese government CBDC gets rolled out. So one question for you, David, is how do those three different things that coexist once the Chinese government program takes effect? And then also longer term, what do you, just trying to read the minds of Chinese policymakers, what do you think they have in mind internationally for the CBDC? Is it is there an intention to, as a tool to help the renminbi become more acceptable or usable internationally? Can you?
Yeah. Thank you, Howard. Actually, two questions, and so the first one about the payment assistance, so actually, I think in most countries, the payment assistance is a result of the public and private partnership. So in China, and we have the central banks, and also like no bank payment companies like Alipay and WeChat Pay, and those two companies have do lots of efforts in the past decades to make mobile payments, and very widely adopted in China. And now every Chinese with a mobile phones, and every merchant, hotel, restaurant, everywhere you go into China, you can find a QR code, and if you scan the QR code, you can make payment with Alipay and WeChat Pay, and so they make a big contributions to the Chinese payment systems. But however, and so the Chinese government also wants to make the retail payment market and a leveling playing field and for other players. And so that's why just one of the big reasons and to introduce the ECNY, and also because the Alipay and WeChat Pay they have their own account systems and they are separate account systems. So for example, if I have only Alipay and you only have WeChat Pay, we can't make payment with each others. And so the government also wants to use the ECNYs to integrate the retail payment use cases and just make the government and Alipay and WeChat Pay will also play a very important role in the ECNY ecosystems. As I have just mentioned, the ECNY are issued by several selected banks, and that means even Alipay and WeChat Pay, they kept their reserve with the central bank. They can't issue ECNY just by Chinese law. And so, but however, there are two banks and affiliate with both Alipay and WeChat Pay, and online and like WeBank with WeChat Pay and Wangsang Bank with Alipay. So the government recently has made these two banks a part of the pilot testings, make them and ECNY issue banks in the futures. That means Alipay and WeChat Pay will join this ECNY ecosystems and leverage their experience and in user adoption and penetration in use case. So you see, this is always a mentality for the public and private partnership for the Chinese government. But meanwhile, the government also wants to make the retail payment system a leveling playing field. That means the market shares enjoyed by those two companies will be lower in the futures. But I think this is good for the Chinese users and the Chinese payment market. The second one, and so I think, in less than 1 year, and in the Beijing Winter Olympics, and for foreign visitors to Beijing, and the government will offer them ECNY wallet. That means, and even if they don't have a Chinese bank account, they can have Chinese and ECNY wallet. They can own and use and ECNYs. And after these foreign users and go back to their own countries, they can still have their wallet with them. So just like me at this moment, I can use ECNY and in American and to make payments with Chinese merchant. So this will facilitate the cross-border use of the Chinese currency. But however, this is only for the retail use. Yeah, for a currency to be as international reserve currency like US dollars, there's still a very long way to go. It's not just a technical problem. It's more about an institutional reform. Yeah.
Fantastic. Thank you, David.
All right. Well, I think we are just about out of time. But Alex, Daniel, Kiran, David, and Ashley, thank you so much for your time today. I really appreciate it. That was a fantastic discussion. Like you said, Alex, just really a little bit could be, hours more of this, and obviously an issue that we'll be following closely in the months and years to come. So thank you all so much.
Thanks so much for having us. This is great.
Thank
Thank
you
you.
very much.
Thanks for joining.
Guys.
Bye-bye. Bye-bye.
Bye-bye.